Good evening. It's Saturday, August 19th, 2023. It's about 9 p.m. on the East Coast. And this is Robert Sin. Again, doing another video tonight. This time it's only focused on gold. And last October, so it was like mid-October, gold was right around 1650 at the time I did the video. I did a video. You can see it on my channel. Go back to last October. It was called the Uber bull case for gold. Gold was about 1650 at the time. Timing was pretty good on the video. Basically made the case for a bull market in gold. Obviously, we know that gold went above $2,000 earlier this year, had a big move since last October. Now we're back down around 1900. And I want to I haven't touched this document since then. This is the document, the talking points I used for that video last October. But first, I want to talk about some gold technicals. So first of all, gold has a bullish seasonal bias in the month of August. September, October, not so much. You can basically flip a coin. Not any seasonal bias at all. In fact, September is the second weakest month of the year for gold, generally. June is usually the worst. But August, gold is up 2 out of 3, 3 out of 5 times in the month of August. Obviously, that's not the case this month of August. We are down basically $100 an ounce this month. We opened at the high of the month and we're at the low right now. So this is not a very good month of August. So generally speaking, when markets don't follow their seasonal tendencies, that's giving us information. So if gold does end up down 90 or $100 here at the end of the month, then that will be bearish. Not only the fact that it dropped so much, but it dropped so much during a month that it generally, more often than not, moves up. Okay, so that's from a technical analysis point of view. That's a negative sign. Then just taking a look at the daily chart. So, 1900 is obviously big support. It's a 200-day moving average. It's clearly a big level, both psychologically and technically. So, let's say worst case, this level breaks here in the next couple of weeks. Gold goes through that 1900 level. So then I'm going to set my eyes down here on the February, March lows. This is a big area of support between 1800 and 1825. And if we zoom it out even more, the 50-month moving average is coming in around 1785. So that's big long-term support down there, closer to 1780 to 1800. And, you may say, well, it's just a moving average. It's like some random number that changes every month. But look at where gold stopped going lower last year. Okay, it's not perfect. It's not an exact number, but it got down to around this 1650 level, near that 50-month moving average, and it put in a triple bottom last year, and it rallied over $400 an ounce from that October, November low. Okay, so those are the big levels I'd be looking at downside, 1900 and then down around 1810 to 1820. Okay, and that's just simple technical analysis based upon chart levels that have worked well in the past, right? But no doubt, if we lose 1900 here in the next week or two, that's going to be not good, because there's really not a big support level that's under that for another, $75 or so. So that leaves a lot of downside ahead, right? Now, going out to the monthly chart, something that was talked about the last few months is the potential. Is this a triple top? The potential for a triple top. And clearly there is potential for it because price rejected uh, above $2,000 three times in the last 3 years. So August 2020 could not close above $2,000 an ounce. Uh, Early 2022, I think this was March 2022, could not close above $2,000 an ounce. And then April, May of this year could not close above $2,000 an ounce, right? And actually, each time the high was around 2,080. Okay. So that is definitely a potential triple top. The problem comes in to confirm the triple top. Generally, what we would want to see is high volume downside coming off of that top pretty quickly. So the so June was a down month, but it wasn't a high volume down month. And then we had an up month, and now here in August we're having a down month for sure. There's still some time left in this month, but based upon how the volume is proceeding so far, this is not characteristic of a high volume month so far. So unless something changes big here uh, in the next, I don't know, 10 trading sessions, 9 trading sessions here in August, this is not looking like the kind of confirmation that would be characteristic of a triple top pattern uh, being confirmed, right? But there's still time here left in August. So let's see how this month closes and keep an open mind. Obviously, a monthly close above under 1900 would be a really bad sign for bulls. And if gold can claw back above 1950, 1960, that would be fantastic because it would be once again showing that support in the low 1900s is asserting itself. And bulls or buyers down there. What are some things that would cause gold to drop another, let's say, $100 an ounce? Like, what would happen, or what would have to happen for that to take place? Well, we can see that gold has a pretty negative correlation, generally speaking. It's not always the case, but generally speaking, with treasury yields. So when yields rise, gold falls. And generally, when yields rise in treasury bills and notes and bonds, it correlates well with dollar strength, right? So recent months, like since gold peaked in early May, that was literally a low point for the 10-year note yield. And since that low point at 3.3%, the day that gold topped at 2,085, the 10-year note yield has risen 100 basis points, a full 100 basis points. That's not a small move. Okay. In bond land, in the land of treasury trading, that is a seismic move. Okay. That is something that doesn't happen very often. It certainly doesn't happen as quickly as in a 3-month time span, right? Then we go to the dollar chart. Well, look, the dollar has risen 6 weeks in a row. Now, this is the weekly chart of the US dollar index. So just put on my technician hat, looking at this just from a chart pattern perspective. This is kind of like a parabolic rally. Certainly for something like the US dollar, this is a very big move, very aggressive move, and a very aggressive down move at the end of 2022 off of the high it reached in September of last year. Since bottoming or putting in sort of a like an emotional low in January, it wasn't an absolute price low, but it was kind of a washout low where it bounced pretty nicely for 6 weeks. The US dollar has put in place a descending channel, a down trending channel. So this is not a typical bear flag because it's descending, it's down trending, making lower highs and lower lows. So TA 101, this is testing the upper rail of the channel. We expect it to move back lower to the lower rail of the channel. That's TA 101. Now, the fact that the 50-week moving average is also moving down, sloping downward, and starting to come in near where price is testing right now adds weight to the idea that this is coming up to resistance around 104 in the dollar index. This is a big level, 104. So we have to see how the dollar trades here in the next 2-3 weeks. The fact that we're going to have Fed Chairman Powell at Jackson Hole this coming Friday, and then the subsequent Friday will be another non-farm payrolls report. Those will be big, weekly closes for the dollar index, the next couple of weeks. So we're going to get a lot of information here, but just simple, unbiased chart perspective here. This is setting up for the dollar to roll back over again. And this is also potentially setting up for a double top in the 10-year note yield. Now, that doesn't mean this has to happen. The dollar could keep going up. Treasury yields could go to 4.5% Tuesday or Wednesday. I have no idea, right? I'm just giving what I view to be the probabilities here. I think there's a higher probability the dollar rolls over fairly soon and moves back down to the 100 area. I also think that we could see a correction in treasury yields, maybe back to 4.1%, maybe all the way back to 4%. But this is definitely a very big move for treasury yields in a short period of time, right? But worst case, obviously, gold busts through 1900 next week. Whatever Powell says is interpreted to be hawkish by the market. Dollar rallies, bond yields rally, and gold gets kicked in the teeth, right? It's interesting to note that silver is holding support around 2250 so far. So this is a little bit of a green shoot, call it a divergence, whatever you want to call it, but it's something that is offering a glimmer of hope here in precious metals land. Obviously, the gold miners don't offer much hope. They're basically at either 2023 lows or 52-week lows, getting really trampled here in the last couple of weeks. But look to the left on the chart, support is not that far away, right? We are down to some pretty important technical levels on a lot of charts. Going back to the fundamentals, the set of points that I made last October when I was saying, bull case for gold here at 1650 is this. Some of the points have proven to be right, and some of them are so far off the mark, right? Killing the U.S. housing market. That hasn't happened yet, okay? We haven't had an emerging market crisis yet. We haven't had housing rollover yet. The unemployment rate has not spiked yet, right? The Fed has moved the yield curve, all interest rates, into positive territory. So the rate of interest you can get either at overnight money or 3-month money or 1-year money or even 10-year money is above the rate of inflation, right? CPI is down to 3% now. The Fed is winning the war on inflation from 9% to 3% in 1 year, right? So the Fed has moved interest rates into positive territory, which is the opposite of what they need to do long term to try to inflate or devalue the US out of such a massive debt that we currently have and continues to grow every single second of every single day. The government is deficit spending, but the Fed is continuing to drain its balance sheet so far, and it's getting away with it. How long can it continue to do that? is the bond market stepping in here and saying, no, you cannot continue to have such a big government deficit and raise interest rates and continue to shrink your balance sheet all at the same time. We're going to sell our treasuries and force yields up to uncomfortably high levels. Okay. Maybe that's what's happening now. I don't know. Okay. I'm not smart enough to know what moves the multi-trillion dollar, US government debt market, right? But just throwing out some possibilities here. Japan, this was a big headline last October. The UK and Japan, they were making the headlines last September, October, because their currencies, the pound sterling, the Japanese yen, were under big pressure at that time. Well, there was massive intervention in the Japanese yen market last October and November. And look at what happened. Dollar yen was all the way up to 150, and they dropped it all the way back under 130 by January. Well, now look at where the Japanese yen is now. We're at 145.41. So the yen has weakened substantially against the dollar since January. This is the fact the yen is so weak is part of the reason why the dollar is so strong, right? Obviously, it's an inverse correlation. It's currency pairs. There's only two sides to the trade. Is there going to be some sort of intervention coming in here? If the yen gets a little weaker, maybe 148, maybe 150, maybe 152, but we've got to be getting close to where there's going to be another big intervention in the Forex markets. Absolutely look to the yen, look to the Japanese, to where the next crisis could be in the world. Because remember, Japan has the biggest debt of any country in the world, definitely per capita, massive debt burden, a very weak economy with poor demographics. They're not having kids. The young population is shrinking, and the population is getting older, right? So you have a massive government debt burden. You have a big economy. It's an advanced economy with a globally important currency and debt market, the JGBs. And this is a ticking time bomb of an economic meltdown about to happen. It may not be happening in a month or a year, but this is a storm brewing out there, right? And the fact that the yen continues to weaken is telling us that something is not so great out there. China's another one. I don't profess to be an expert on China, far from it. I'm a complete novice, but I can look at charts and look at this. Chinese real estate, this is an implosion. Okay. This is almost 450 level in May of 2021, and we're down to under 100 now. So that is a crash. There's no other word for a market that drops 82%. That's a crash. And notice how it was down to these levels last October when the yen was also very low. It had a bounce just like the yen had, but now it's back to the lows. So there is some sort of correlation between China and Japan. Obviously, they're both Asian countries, so there's a correlation there. There's a crisis, a property debt crisis in China right now. You can see that quite clearly out there across markets, and even just reading financial news. I don't know. I'm looking at the yen here, right? But it's no accident that gold bottomed right in here, right? So it feels to me like we're coming close to a big inflection point. I don't know what the macro event is going to be. I don't know exact timing of it, but it feels like markets are lining up for a big event here fairly soon. And that big event could trigger a trend change in certain markets, like treasury yields, like gold, like the dollar. Yeah. So this is me trying to be as objective as possible. Obviously, A lot of these precious metal charts are ugly. They're in very clear downtrends. They're very weak. Gold has definitely been under pressure here in August, but there are some big technical levels here that we can use to help trade and guide us. And if you're a long-term investor, you shouldn't be looking at the daily chart and these little micro moves. You want to be looking at the overall trend, the 50-month moving average, clear uptrend, 200-month moving average, clear uptrend. And for gold, clearly the big long-term support levels around 1800, right? So it would be completely normal for gold to come down here in the next few months and retest that big layer of support around 1800, find that support, and then the long-term bull market trend reasserts itself. And sometime in 2024, there is actually a new all-time high breakout above 2100. That's the bull case. That would be a completely normal, sequence of events, long term for an asset class, an asset like gold and precious metals. So hopefully this video gave you some ideas, some new perspectives, and you gained some value from it. If you did, please hit the like button, subscribe to my YouTube channel, follow me on Twitter at CEO Technician. Have a great weekend.